Hi again. Welcome to the webinar titled FinTech and Crypto Assets in Times of COVID-19. We are going to start now the webinar. So before I start the webinar, let me introduce myself. I'm the presenter, Liliana Reasor. I am the CEO and founder of SupraFin, a wealth tech platform to help people invest in crypto assets. I am a crypto assets and fintech entrepreneur with 20 years experience in fintech investments, trading, risk and portfolio analytics from tier 1 financial institutions. I have a Master's of Science in Computational Finance from Carnegie Mellon University and an MBA from UCLA Anderson. So I'm going to start with a quote that is very topical for this COVID-19 crisis. And this is a quote by John F. Kennedy. So the Chinese use two brush strokes to write the word crisis. One brush stroke stands for danger, the other for opportunity. In a crisis, be aware of the danger, but recognize the opportunity. This presentation is going to focus mainly on the opportunities because, as you are aware, there are probably many other presentations out there already focusing on the crisis. So the lockdown related to COVID-19 has caused equity markets such as the FTSE, the S&P 500, and the Nasdaq to decline by approximately 30% since the highs of 14 February 2020 to March 23rd, 2020. Now the markets have since then recovered by 10%, and now overall they are down only 20%. And why has this happened? Well, these particular markets are highly liquid, and information tends to be captured right away. There is also funds that are always on the look to sell high, buy at the bottom, and they use all kinds of sophisticated analytical tools, algorithms. But also there are funds that have stop-loss orders, and those funds tend to liquidate as there are major market downturns. And so that further accelerates the market declines. And then you also have the people that are the followers, the herd mentality. They sell as the market goes down and they buy as the market goes up. And so that causes markets decline beyond that probably what should these market declines be. But obviously, so while some people might be always trying to sell at the high and buy at the bottom, this is really not possible for all of us to do. Timing the market is a very difficult thing to do. But also we must learn from past crises, and we have to look at the whole picture. And by that we mean we have to look at history. So markets overreact. Markets overreact when they go up, creating bubbles, and when they go down. For example, we have the 2000 internet bubble. That was a massive bubble that created a huge market overreaction when the market was going up. But then we have other crises like 2008 credit crisis, when the credit crisis, which should have affected mainly the credit markets, also affected the equity markets. And we saw equity markets such as the Nasdaq that declined by 50% from October 2007 to February 2009. However, after we had that 50% decline in the Nasdaq market, a year later, the market went up by 62%. And then 2 years later, from February 2009, the market went up by 102%. And then since February 2009, all the way to February 2020, we have had, the Nasdaq has had an incredible return of around 2,050% in total. In an annualized basis, as a cumulative annual growth rate, that represents a 19% cumulative annual growth rate. So obviously that's a massive increase. And even today, with the decline in the markets due to coronavirus, NASDAQ is up 17%, so that's 17 cumulative annual growth rate. So it's important to look at the macro picture. When it comes to making decisions that involve risks, we humans can be irrational in quite systematic ways. So there was an experiment run by some famous psychologists where they tried to analyze how irrational were people when it came to systematic to risks. And they created this hypothetical situation. They said, let's assume the US was preparing for an outbreak of an unusual Asian disease that is expected to kill 600 citizens. To combat the disease, people can choose between two options. Option one, an option that will ensure 200 people will be safe. Option two, an option that has 1/3 probability that 600 people will be safe, but a 2/3 probability that no people will be safe. Now, interestingly enough, the people in the experiment, 72% of the people in the experiment chose option one. So why do they choose option one? Option one, because the way the options are framed, they are framed as gains. And apparently, when options are framed as gains, people tend to choose whatever is perceived as less risky. And so option one is perceived as less risky. But in reality, both options yield the same. Both options have an expectation that 200 people will be safe. Now, the experiment goes farther and decides, and the psychologists decide to reframe the options. They said, how about we reframe the options in terms of losses? So option one is that will ensure that 400 people dies. Option two, there will be a 1/3 probability that nobody dies and 2/3 probability that all 600 people die. So guess which option was chosen? So 78% of the people chose option two. So why option two this time? Because it was framed as losses. And when they saw the losses of option one, they would rather choose the option that is perceived as riskier, because it wouldn't show those 400 people that will die. But in reality, as we just said, both options yield the same expectation that 200 people will die. So this is something for us to keep in mind when we make investment decisions, or whatever decisions we make. The experiment was run by Daniel Kahneman and Amos Tversky, very famous psychologists, and most of you know Daniel Kahneman for the book Thinking Fast and Slow. Now, before we discuss how COVID-19 could affect FinTech, we need to understand what is driving the faster digitization in the world. So this graph gives you a good idea of what is happening to innovation. And apparently, time to innovate, or the time between major innovations, is shrinking. And this is leading to the faster digitization of the world. For example, it took 11,000 years between the agricultural revolution and the industrial revolution. However, it only took 120 years between the industrial revolution and the creation of the light bulb. And then, from then going forward, it only took 90 years for the creation of, until the moon landing. And then it took 22 years until the creation of the internet. And then it has taken 9 years for the human genome to be fully sequenced. So obviously this indicates that the time between major innovations is shrinking, and this is what's leading to the faster digitization of the world. So COVID-19 might have accelerated the need for digital transformation globally. The amount of travel is going to decline as more selling and marketing becomes virtual. And obviously, selling and marketing should be virtual because we already have all of the tools to do selling and marketing virtual. We have tools like Zoom, Skype, Google Hangout. We can do video conferences everywhere in the world, and we can do it from anywhere. We also have solutions like Dropbox or Box where we can store our files on the cloud and anyone can just access them from anywhere in the world. So there is no reason really for selling and marketing not to be virtual. So unless you really need to travel to meet someone in person and it's completely necessary, the amount of travel will indeed decline. Housing might change to accommodate working spaces as more people will be allowed to perform work virtually. Workspaces might be optimized for audio, video, real-time collaboration, and reliable connectivity. There will be an increase in collaboration tools and platforms that support virtual and asynchronous collaboration. Cash, checks, and bank branches might face extinction. Financial institutions will become more digitized, and things like crypto assets, like cryptocurrencies, might gain wider adoption. And what does that mean for us? So because automation will drive efficiency, we humans will focus more on innovation, creativity, and problem solving. All of this could lead to less cars on the road, less traveling abroad, and hence less pollution. So this is very good for the environment. This also creates opportunities for fintech companies. And why is that? Well, there are many fintech companies that embrace working virtually from anywhere and have a scalable technology that is cloud-based, particularly the smaller fintechs. Fintechs that allow people to carry on financial activities remotely through apps and through web will benefit greatly. Because the reality is, why shouldn't you and me be able to access mortgages, investments, borrowing, lending, payments from anywhere we are remotely? The technology already exists and fintechs have it. Fintech is becoming the new norm. COVID-19 has driven up the use of fintech apps in Europe by 72%, according to a consulting company called the Reasor Group. Branchless banking. Yes, all of us are now doing branchless banking because we are in this lockdown. But branchless banking should have happened a long time ago. However, it's being now accelerated by COVID-19, and this will drive adoption of banking apps and online solutions, which again is great for fintech. But also a lot of the banks, apparently, they are spending a lot of money in leases and the utilization rates of their branches was very low. So this might give them an opportunity to really transform themselves into a digital solution. And although a lot of financial institutions have already been partnering with fintech companies, COVID-19 might accelerate these partnerships. So how is COVID-19 going to increase crypto assets? So first, let's discuss what are crypto assets, because I know some of you already know what they are, but a lot of the people in the audience don't. So crypto assets can be categorized in 4 classes. Exchange tokens. These are tokens not governed by a central authority. And they are created to be used as a means of exchange and as an economic incentive for people to maintain their respective public blockchain. For example, Ethereum, Bitcoin, Litecoin. So the Ethereum cryptocurrency has their own, the Ethereum blockchain, for example. There are also utility tokens. These tokens grant customers access to current or to future products and services. And because these products and services have value, then these utility tokens can be used to raise capital. Utility tokens have a very different business model that the business model we are familiar with in equity or fixed income, but they are quite interesting, and if implemented correctly, they could be a great tool for companies to raise capital. Stable tokens are those tokens that are collateralized by fiat that is relatively stable, like the US dollar, but they could be collateralized by some other assets. And the goal of the stable tokens is to have relatively low volatility. So they can be used for payments globally, or they can be used for purchases. Security tokens, this is the last category, and this is a new kind of token. They are linked to securities like equity, fixed income, credit rates. Currently, there are mainly exchange tokens, utility tokens, stable tokens, and there are very few security tokens. So there are 2,000 crypto assets, mainly exchange tokens, stable tokens, utility tokens that are trading in around 200 or 300 cryptocurrency exchanges globally. Now, some of these crypto assets are good, and there are others are not so good. So obviously, the devil is in the detail. So why might COVID-19 increase the crypto assets adoption? Well, exchange tokens can be viewed as an asset, but also as mediums of exchange. They could provide competition to government-backed currencies because they are also viewed as mediums of exchange. So crypto exchange tokens are particularly interesting in countries with hyperinflation, such as those countries in emerging economies, or countries with potential currency devaluation. Because if you know that the currency you hold is going to devalue, why wouldn't you buy a cryptocurrency? Or if your country is experiencing hyperinflation, why do you want to hold into that currency of your country? So you might want to buy a cryptocurrency exchange instead. However, exchange tokens could also create competition in developed countries. And this is particularly relevant now, because now after COVID-19, we have seen these huge rescue packages, the US with their 2.3 trillion rescue package, UK 330 billion, Germany 750 billion euros. And so this is going to lead to governments to increase debt. Obviously, these packages were needed because it was the countries or these governments that decided to first to bring to do this lockdown. Utility tokens. So why utility tokens might benefit during COVID-19? Well, utility tokens provide an alternative to help ventures raise capital from anywhere in the world without the need of venture capital and equity markets. And venture capital equity markets are obviously, they're more tied. So venture capital is more tied to equity, but there is no reason why utility tokens are linked at all to the equity market. So, and some of the investors in utility tokens and exchange tokens are not the same investors in equity or venture capital. So that's just something to keep in mind. Now, the crypto asset industry is an emerging asset class with great potential, nonetheless. Crypto assets accounted for 1 billion in 2013, and now they account for 202 billion in market capitalization. This represents a 115% cumulative annual growth rate. So how does this compare to one of the highest growth market, which is the Nasdaq? So Nasdaq, in that period of time, only had 14% cumulative annual growth rate. Now, again, this is just something to keep in mind. Now, also, before I forget, the crypto assets only represent 0.07% of the total financial assets globally. And how are crypto assets performing now? Well, year to date, so from January 2020, the Nasdaq is down 9.8%, while many cryptocurrencies are up by different percentages. And here I've chosen some few cryptocurrencies. I mentioned there are 2,000. Obviously, I cannot put all of them here, and some of them are not worth putting here. And so I just chose some few that I can exhibit in this graph. And all of them have different returns. Some doing better than others. And by the way, I said there's 2,000 cryptocurrencies. Bitcoin is probably the first generation, is the cryptocurrency linked to the first generation blockchain, and it's not necessarily the best performing cryptocurrency this year. So that's another thing to keep in mind. And so now, let me just quickly introduce you to SupraFin, because as we are discussing crypto assets, SupraFin is a platform created to help people invest in crypto assets. And so yeah, I'll briefly tell you what SupraFin does and how it can help people understand better what crypto assets are, and also actually help those individuals that don't have time to monitor portfolios, create portfolios, and so on, which is really most of us. SupraFin offers a web and mobile platform for people to invest in crypto assets. It brings financial inclusion because people can invest from as little as £100. So with £100, you can create a diversified portfolio of crypto assets. The platform leverages cutting-edge investment risk models that assess relative value in crypto assets, and then creates a portfolio of crypto assets to match the risk profile of the client. The client is the ultimate decision maker as to which portfolio they buy. The platform recommends, and the client finally chooses whether to accept the recommendation or not, and the client can modify the portfolio. There's automated monitoring. Obviously, in markets that are declining or going up, or if you want to be able to monitor those scenarios. If you have a job, you cannot do it yourself. So you need to have a platform doing that. And so the SupraFin platform will always be evaluating the risk of each cryptocurrencies and recommending periodic rebalances based on the risks of each crypto assets, and those risks change over time. And also the platform offers exclusive reports. So once you have your portfolio of cryptocurrencies, you will be able to see an exclusive report that evaluates those cryptocurrencies that are on your portfolio. Last but not least, then where will you store your crypto assets? Well, you can store them in a third-party custody solution, or you can store them on your own wallet. So the platform offers many benefits. It's a smart platform. Transparency is safer. You can invest in crypto assets in a safe way. Automation, at a click of a button, you can create a portfolio and rebalance the portfolio. And it's customized to your risk profile. This is how the SupraFin app looks. It's very sleek. And we're launching the platform probably by mid-year, give and take. Also, we are doing a capital raise of 1 million, of which 1 to 1.5 million, 1 million originally, but now we have interest from Asia for the 1 million from different groups. Interestingly enough, in spite of COVID-19, and we are now increasing our capital raise to 1.5 million to see if we get also interest in the Western world. If you want to learn more about crypto assets, please go into the website. We have many videos, educational videos on crypto assets, and also if you want to register for our newsletter, please do so there. Now I'm going to open it up for Q&A. So if anyone has questions, please feel free to type them on the chat box. So if are there any questions? If there are no questions, then I'm going to be sending, oh, there are some questions, sorry. Other questions. Let's see. So, okay, so sorry, I'm wondering where it is beyond the crowdfunding source. Here's from Nuno. Let's see. From Nuno Nunes, I like to have learned something new this webinar. Utility tokens can be used for raising capital with a VC style. I wonder whether it is beyond a crowdfunding model. Yes, it is. So obviously, I did not have enough time to discuss what crypto assets all the details on how these crypto assets work, because this is more about the trends, how COVID-19 is affecting crypto assets. But the way utility tokens, so the utility token business model is very different than the equity business model, because in equities are linked to performance, financial performance, the financials of the company. So if you invest equity, you expect a certain return that comes usually from the profitability of the company. While utility tokens, they can be thought of as buying products and services for a company in advance. But where these companies maybe are at the beginning, they are startups and they're not necessarily well developed. So they don't have any financials, but then as a buyer of a utility token, you don't care about that, because typically the buyer of the utility token should be a customer, a potential customer that also wants to use the products and services. For example, an example of utility token is the Binance coin. Binance is a cryptocurrency exchange from China, well, Asia really, and they issue a token that provides you a 25% discount into the platform. So if you want to use the Binance cryptocurrency exchange, you can use this coin and get a 25% discount to access it. You can also use it for payments in certain places. So it has many users, use cases. And it's also it's you don't have to. The way you analyze, also these utility tokens are linked to particular blockchain. For example, the majority of utility tokens were issued in the leveraging the Ethereum blockchain. And then, so when you issue the utility tokens, you trade them, you buy them, you sell them, all those transactions get stored in the Ethereum blockchain. So it's completely outside the current financial ecosystem. And then we have another question. Okay, let's see here. Where do you think the price, oh, Jacob, how do you think? I don't know, this is question. Oh, Jatir, can this platform be used also for peer-to-peer lending? This is not the goal for this platform. This is a platform to help individuals invest in cryptocurrencies, and it could also be used to help them in the future, potentially, borrow against those cryptocurrencies or lend their cryptocurrencies. Not necessarily peer-to-peer lending, so this is not, all these kinds of things can be explored in the future, because this is FinTech and cryptocurrencies involve or move at a very fast pace. What can we do to accelerate cryptocurrency adoption? Well, that's a very general question. I think education is one of the most important things. A lot of people don't understand cryptocurrency. So one of the things we did in February, mid-February, is we hosted an educational event at Rise London, where we explained how cryptocurrencies work, and also how to utilize cryptocurrencies and how to leverage existing platforms to invest in cryptocurrencies. I think maybe if we get universities more involved, there are already universities involved with cryptocurrencies, like Imperial College London. They have a cryptocurrency group, and I bet there are other universities. So some of the students are already taking classes on that. So adoption is going to come definitely from people at universities and from investors, because I know there's already a lot of high net worth individuals investing in cryptocurrencies, because they're always looking for new asset classes with new potential. Oh, another question. The adoption of new digital technologies is always slower in emerging countries. Are emerging countries adopting crypto in the same speed? Well, I don't know if the adoption of new technologies has been slower in emerging countries. Actually, I will say is the opposite, because, well, it obviously depends on which technology. Mobile technology, for example, is highly adopted in some frontier markets, particularly because it allowed them to do things that they couldn't do in the past. Banking, for example, there were no banks. So no one was going to build a bank in a frontier market, and you could bypass it by through mobile technology, which was much cheaper and easier to implement. And also there are countries like Colombia and Venezuela, perhaps, and Brazil. I think there's some few companies involved with cryptocurrencies there. And obviously emerging markets, especially those with hyperinflation, could potentially benefit from these cryptocurrencies, but there's already players in cryptocurrencies in emerging economies. At least I'm aware of those in Brazil and in Colombia and Venezuela. And probably Mexico as well, yeah. And then another question, what is the venture capital situation? Are they on hold? Are they looking for opportunities? Well, I think it depends on who you talk to in venture capital. There are some venture capital companies that are more with the founders that are more seasoned, and those founders that are more seasoned, they know how to invest anytime. And then you have the people with no expertise or that haven't worked too long in the industry and they get spooked by anything. So I think it depends on which venture capitalists you speak to, but they obviously tend to be cautious because they are linked to the equity markets. Interestingly enough, the equity markets already move very fast because mainly people that invest in equities, or at least the professionals, they use algorithms and all those sorts. Venture capitalists, they don't use any algorithms. They move at a very slow pace. It's a very different environment. And so interestingly enough, cryptocurrencies is merging this a bit of know-how of fundamentals with algorithms. So this is a very interesting world, cryptocurrencies. How many thousands of cryptocurrencies will survive? Will there be a market shakeout, or is it already happening? Well, how many will survive? Well, interestingly enough, it's not about necessarily the cryptocurrencies that exist. It's also about the new cryptocurrencies that will be created. Yeah, some few cryptocurrencies, some of the cryptocurrencies that exist are rubbish, but some are good. Yeah, this is why I say the devil is in the detail, and you need asset management or someone that can analyze them and select the good cryptocurrencies. But there could be new cryptocurrencies. These cryptocurrencies that exist, they're not going to be the only ones. There will be new cryptocurrencies. And that's the beauty of it. And this is why I believe this is a new asset class. These cryptocurrencies could come from anywhere. A lot of them have come from Asia, maybe because Asia tends to be a bit more, I don't want to say innovative, maybe more risk-taking. So when it comes to finance, particularly in China, they have not had a very developed financial infrastructure in terms of technology. So they don't have much legacy technology. And so they feel like they can innovate more when it comes to things like this. However, cryptocurrencies, yeah, there's going to be new cryptocurrency issue anywhere in the world. We could have new exchange tokens, we could have new utility tokens, new stable tokens, and new security tokens. And security tokens has huge potential, but it's currently there's not a lot of new security tokens, but again, this could be issue from anywhere in the world. So cryptocurrencies, it's not about just looking at the existing cryptocurrencies, it's also thinking about the new cryptocurrencies. And yes, some will die and some survive, like with everything. The same with equity. I mean, how many companies have died from an equity perspective? Many. Well, I think I've answered most of the questions. Okay, see 3 more questions. No, open questions. Okay, how long does it take to open an account? Well, we plan to launch the platform on mid this year. Well, it shouldn't take that long. You'll input your information. We'll KYC you. We'll have a slick KYC solution, and then the minute you deposit money through your bank account or your debit card, you're ready to go. Is there more volume on the crypto market now than the Corona lockdown is in place? I haven't actually looked at the volume. There's definitely a lot of trading. That's a great question. I need to go and look at it, but probably because Now people are all at home. They don't know what to do. Well, other than go online. So if they were thinking of investing, trading, doing whatever, now they're going to definitely do it more often. You mentioned you're raising 1 million to 1.5 million. Is that a traditional equity fundraise or rather by a white paper crypto raise? Interesting enough, we are doing an equity raise. Yes, in the future, one of the things I realized is I do believe on the utility tokens concept, and I would like to use utility tokens in the future, but I'd rather have develop my platform and have some customers to whom I can also I can offer my utility tokens, because also the utility token market is not a large market, and there's a lot of investors for utility tokens are mainly in Asia. But we are, I do believe utility tokens is a great alternative, and we're always looking to opportunities for this market to really grow. And obviously, for the utility token market to grow, we need to do it in the right way so that everyone can benefit, and so that it can be sustainable. Well, thank you everyone for your questions. Oh, there are more questions. But thanks for a good presentation. Thank you to you all. Thank you to you guys. It was great to have you all. I will be sending an email with the video and the presentation. So, and feel free to follow up with me after this call.